Welcome back, and joining me for a closer look of the day's trading session is Cobus Potgieter from Southern Cross Capital. Thank you so much for your time, Cobus. You know, I was really just thinking of the JSE and how we're constantly reaching record high after record high, and I thought that today would be another day of trading in green territory, but there has been a little bit of a pullback. And I was thinking, you know, if you're going to position yourself well to take advantage of these gains, you need to be in resources. But at this point, the resources are actually leading the losses that we are seeing now. What have you made of how that market has performed today, but really going from green to red?
Yeah, okay, so absolutely, overall, market is down today, and as you've pointed out already, driven by the resources and specifically the precious metals counters. But we do have to counterweight that with, the market is up robustly, 32% year to date. Around 400% of that has come from the resources.
Wow.
So, we saw a robust platinum price. We've seen record gold prices earlier in the week. And essentially, this is really some of that tapering off. The enthusiasm around the South African investment case in particular certainly hasn't fizzled out. And we see that in the fact that the so-called SA Inc. stocks, the locals and the industrials, they are comfortably in the black today. So,
Okay.
I hate it when people put you on the spot, but we can't clock records every day, even though we did
Yeah.
again this morning.
Yeah.
Sometimes there's profit taking, sometimes there are more sellers than buyers. But
Okay.
ultimately, we saw this very, very hot resources sector sell off a little bit.
All right. Well, talking about the industrials that are in the green, let's go into Naspers, because we did have that 5-for-1 stock split kicking in today, and we saw this nosedive of more than 79%, close to 80%. But actually interesting that as the session was closing, I saw at some point it was up more than 1%. What does this mean for existing and new investors?
More relevant, I would say, to new investors, but okay, no, it's relevant to both, frankly. It's
Yeah.
essentially the Naspers management decided that the nominal value of a single share is simply too high, and that creates barriers to entry to some extent. You know, if I wanted to have 5% of my portfolio in Naspers and my portfolio wasn't particularly large, just the fact that it's such a high price, I might end up with either 7.5% or nothing.
Yeah.
Just given that that share price is so high, and one must say this convention tends to differ between different markets. We know the likes of Tesla did stock splits and somehow presented that as a short-term bull case for a rally, but really in the US you want a higher share price overall, and we do see that. We see fewer stock splits there because they tend to price their brokerage in cents. So it's sort of a cent or 2 cents or 3 cents per share traded, whereas we tend to trade it in the more logical sense, basis points or a percentage of execution. So one is more agnostic, and ultimately, one doesn't want a very, very high nominal share value to prohibit retail investors or make the share harder to access for smaller investors in particular, or even bigger investors with smaller mandates. You know, I might be managing big money, but one of my funds is a bit small, and now this is creating a little bit of friction in terms of owning that share. It just simplifies that, and on the same day that split occurs, the Naspers weighting on on a number of share bases goes ×5 in any of the given indices that it's a member of. So ultimately, it's the same thing. In fact, the proper market data providers will just take that historical share price and divide it by 5.
Okay.
On the likes of Bloomberg, for example, it's already been restated. I can't even see what the actual share price was.
Okay.
Well, I could just times it by 5, but that history has already been restated.
All right. Well, one thing I can tell you, Cobus, is that I'm happy because I can finally look at Naspers. Let's get into the EV market because we've had, numbers coming out from BYD and Tesla. So BYD seeing its first sales decline in 2025, and really a materialization of concerns that there's a slowdown in the momentum of this market leader. But On the opposite side of the spectrum, we did have Tesla saying that its deliveries were up, but actually even surprised to the upside. I don't know, just talk to me about the dynamics playing out in that EV space, because it seems that, I don't know, the growth dynamics are pretty uneven.
Yes, yes. BYD, obviously the new fully vertically integrated player, really, really going after not just Tesla's lunch, but the entire motor
Yeah.
industry's lunch
Yes.
globally, rolling out incredibly aggressively. And it's really to do with those forward expectations that people have been disappointed about. And I think the real disruption for Tesla hasn't necessarily been the direct competition. It's almost the commoditization of the of the electric car market, whereas before electric cars might have been viewed in a similar lens to how we used to view our cars. You know, I'll buy a car and it will depreciate over the next 5 years, but I'm not going to lose, you know, half the value or anything like that. Whereas now it seems that given the pace of progression, uh, these cars depreciate incredibly quickly because next year the battery's better, everything's better. These things are
Yeah.
improving at a rate of knots, and so last year's model loses an enormous amount of value, and that's really put a lid on Tesla, together with all the social backlash and all the
Yes.
rest. Interestingly, they posted record numbers because of the suspension of the tax rebates under the Trump administration that are essentially being phased out after 30 September, which led to American buyers aggressively buying before the tax dispensation expires, so they could still cash in that $7,500 rebate while there was still time. But in all the other markets, particularly Europe, Tesla saw declines in excess of 20%. So the market is actually reading this as a pretty negative result. And once
Yeah.
again, our hopes are pinned on the likes of robotaxi and robotics
Yeah.
more than anything else. And those are essentially promises. But really, what's happening in that space is both the pace of improvement and sort of just the incredible competition, price cuts, all the rest,
Yeah.
just putting pressure on all of the players in that space, and we are likely to see some consolidation. There simply isn't enough room in the market for so many EV producers.
Yeah. Okay, very, very interesting. Well, let's get to your stock pick for today. What are you choosing?
My stock pick is Mr. Price. We chatted about SA Inc. and I guess the story for South Africa. Uh, the rand remains robust. The bond yields are at the lowest level we've seen them in the longest time. We are seeing substantial foreign buying of South African bonds, and a lot of that has to do with the sort of anticipation of increasing growth. Mr. Price has been suffering in the low growth regime of the last 7, 8 years or so. Slight decreases in operating profit margins over that period, but it remains the highest quality name, and it is now trading at such a substantial discount to its historical rating. When my career started, Mr. Price was almost the ultimate FOMO stock that you could never get yourself to buy. It was trading on PEs of 28 and 30, that sort of thing. It was just this unbelievable winner, and it remains a very high value stock, high quality stock, excellent management team. And if we do eke out a little bit of economic growth, and I can get this on a PE of less than 13 forward, it looks like a fantastic proposition to me. And it's given up most of those, call it post-GNU rally gains. This looks like a very attractive entry point, and definitely something I would overweight in my portfolio.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today, Cobus. Really appreciate it. That was Cobus Potgieter from Southern Cross Capital.